Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, February 10th, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. First of all, we're going to have a lot of Fed speak this week, a lot of FOMC members speaking, including 2 today and 3 tomorrow. And on top of that, you have Fed Chair Powell speaking 2 of the next 3 days, Tuesday and Wednesday. So that's going to be something that the market's going to be looking closely to, and once that's over, that could create some additional volatility looking forward. So just keep that in mind. Now, based on the charts here, again, we're going based off of this impulse low to this impulse high, the pullback to the mid. We have our key range, right? And what you're seeing right here is you're seeing a rejection currently of the key range high. Here, price went above it on Thursday, and then Friday it dropped back below it. Here in overnight trading, price came right toward it and is starting to back off. And so we're seeing kind of a doji pattern here. So right now, bears are defending this zone at the top end here. And if this is a rejection of this key range high, then odds increase that you will return to the midpoint of that range. And that's this lower level right here, 32.59 quarter, just call it 32.60. So 32.60 would be the next target below. Now, it doesn't have to drop straight away today. It could certainly do that. We could even see, say if today finished like this, we could see price push above it on Tuesday and try to hold above 33.40 in this high and then fail. And that would be a failed high above this high. It would be a lower high, a rejection. That could get you going. So again, any rejection of this 33.40 zone over the next few days could lead to a reversal back toward 32.60. Now keep in mind this market has been very bullish, and again we continue to hold kind of in this uptrending channel. So even if that were to be the case and we drop back down, again there could be another buy and go until that pattern is violated. Alright, let's take a look at the NQ now. Okay, here's the NQ. Now, no key range drawn up on this one, although I likely could get that low to high. If this is the mid, then that's your key range. And at the moment, that key range is the previous high and low anyway. And that's basically what we have here. High, low. The midpoint is the pivot range here, the bottom of the pivot range in this case. And right now we're setting above that high, above the previous month's high. 1, 2, 3, 4-day range. That 4-day range right now, it's going to be very important. We talked about the 3-day range last week and how narrow that was. There it is. And right now we're seeing a failed low and price pushing up a little bit. If this is a rejection of that point, we could see an explosive move to the upside. Again, if this is going to further break down and this fails, then we're just dropping right into the trigger zone. So again, this market remains very bullish, you can see, but we might be at this upper end of this channel and could rotate down. If we do, again, rejecting that previous month's high could lead to a move as deep as the previous month's mid, or this FOMC key level could be a good target as well, 91.38. Again, this market hasn't had many down days in a row, but it does get 1 to 2 good days down before it likely rotates back up. Again, we'll see how this develops, but overall this market remains bullish, and while a pullback may occur, it could be a great buying opportunity ahead. Let's take a look now at crude oil. Now, crude oil has been holding at lows. This was a major sell-off from these highs, dropped down, and here's your previous month's low. It's been holding at lows the last week. This is the 6th day running now. 1, 2, 3, 4, 5, 6. You can see each of the last 5 days, bears came in and defended the previous month's close, which was also the previous week's close, and kept prices generally below the previous month's low. But a very narrow range developed. You can see right here again, the range is very narrow here. This is a 5-day range that is trading, in that case, less than 65% of ADR. So right now, with that range right here, again, that suggests that we could be looking at major expansion pretty soon. And the fact that we are trading below the previous month's low and close like this, but haven't really sold off lower, suggests that bears could be getting too short, and if price pops above that 52 or 52.50 zone, we could see quite the short squeeze back toward 57, maybe even a bit higher. So again, watching for a potential short squeeze if it goes above 52s here could lead to a very big move up ahead. Now, if there's a failure to reestablish above 52 soon, then there's no real clear air, or there's no real support below 50. There's nothing but clear air down to about 42.50. So that's a long way down. So either bulls are going to keep this bid and absorb late sellers here, or this thing has a lot more downside. So that's why I'm looking for a potential short squeeze above 52s. All right, lastly, taking a look at gold futures, you'll see here that gold is still in an uptrend overall. It did pull back. Extreme reversal developed last week with a nice little push higher. Overall, this thing has been bullish, but really has been mostly range bound over the last 4 to 5 weeks. So that type of price action right there again suggests that the overall trend remains up, but it's kind of mostly in that sideways phase right here, and until we can break above 1600 or below 1550, we're likely stuck in that zone for a little while until proven otherwise. All right, that is it for now. We'll see how this develops the rest of the week. Good luck, trade well, and I'll see you in the trading room. Take care.